What's up, guys? Welcome back to the channel. Thanks for tuning in. Today in this video, guys, we're gonna do some videos on Discord. These were some recommendations that were popped out. So basically, DM Smith was asking, hey, it'd be nice to see a video on how to properly evaluate fundamentals on a project. Quick reference, guys, tools you use, etc. You guys see it. We're gonna go ahead and break down in this video what are some fundamentals and what should we look for in a project slash protocol. All right, so guys, we're gonna go ahead and jump into the first question. So it'd be nice to see a video on how to evaluate the fundamentals and quick reference guides on a project. So what are the very first things you guys want to look for in a protocol? Well, the first thing is, well, innovation. Now, you want to look for a protocol that's actually doing something and not just like another piece of junk. All right, so guys, when you guys are looking for one and you found out that it's not a piece of junk, and what do I explain by a piece of junk? Well, a fork of a fork of a fork of a fork. There's no innovation involved. It's literally just a Ponzi farm that launches and says, hey, we're looking to be Sushi Swap. Wait, they already have Sushi Swap. Why do I want to do that? It's the same concept with like any inventions that come out. Someone invents something that's already been invented. Like, for example, the next tire. Like, you literally just make the tire a square instead of round. Well, really don't need to reinvent the wheel. You know, that saying came from somewhere. So, first off is something that's just not a piece of junk and that is actually different. Yes, there are tons of Ponzi farms. You can make money with them, getting in early. But how do you know when's early? The farm can be over the second it starts, or it can be over 2 hours after it starts. That's the biggest thing. Second is community. Water break. All right, so second is community. What's so important about the community? Community is very important. Why is that? Well, bear or bull market, if you have a trashy community that's just there to make a bunch of money, well, when they're starting to lose money, what's going to happen? Well, they're going to leave in a heartbeat. So that is something to keep in mind. How do you find a community? Well, just go in Discord and Telegram, ask a question, see what happens. If they're like, they respond like that, or they're like, hey, it's great you asked. What brought you here? Or where did you learn about the protocol? How can I help you, man? Glad to have you here. That's what you want to look for. If it's like, hey, what are the tokens? You're fudding my project. And you're like, dude, what's wrong with you? I'm just asking what the tokenomics are. You don't want to go in that community. It's straight trash. I'm just going to tell you now. I mean, just don't mess around with it. That's the second thing, is community. Now, let's go into the next things you want to look for. He's asking, what tools do you use, / total market cap, circulating and diluted, vesting schedule, tokenomics, ponzonomics, revenue, etc. So now when you're looking at a protocol, now that you found your protocol, what are you going to look for? Well, first off, look at the market cap. Now, you can look at everything. Everything's really relative, and you can compare it to what we already have. So say, for example, you have Sushi Swap sitting at, I think it's like $2 or $3 billion market cap, and you have something that launches just like it on another protocol or on another chain. There's literally just a fork, nothing different, and the community is not even near as big, and it automatically has a $6 billion market cap. There should be red flags that automatically go up. If there isn't anything different than it, and it has a higher market cap, what is the risk reward there? Well, it's more likely that it's going to go down, because what we already have is a lower market cap. Now, that's not saying it won't keep going up, but everything's relative. Like, just go with the risk reward. Would you rather be in a protocol that goes 5x, 6x, 7x, or would you rather go into something that has the potential to do a 2x? I mean, at that point in time, I would rather just throw my money into Bitcoin and Ethereum, because I know long term, like, I'm bullish on them long term, and they're the quote unquote the safest assets that are out there in the crypto markets. Of course, this is not financial advice. I'm not a financial advisor, but again, everything's relative because crypto is risky. I mean, all of crypto is risky. That's why you guys are here, the risk reward, right? So you need to look at the market caps. If it's an insane market cap, just kind of be aware, because in order to move the number, it's going to take a lot. I give the example of Hex, guys. Just look at the trading volumes on Hex. It's literally got a couple $1 million in trading volume. And what's the market cap of that sucker? The market cap is literally like 400 billion or something like that, or 500 billion. The market cap is ridiculous. Actually, it's probably more than that. Actually, I think it's probably about 600 billion. But you have a $600 billion market cap and trading volume in the millions. There's something wrong there. Like, what does that mean? Well, it already has volatility like that, and it is barely trading. Now, just imagine if someone just wants to dump a bag. You know, like maybe, let's just say $1 billion. What would happen to the price? It would tank, like nuts and ham tank, because there's no liquidity out there. It would just be really bad. I'm not saying there's a bunch of people who have $1 billion worth of hex who want to dump, but people are earning hex like nuts and ham because the staking rewards, and eventually, over time, the Ponzi is going to crash soon. But hey, that's just my thoughts. So that's the Ponzonomics on that. I give that example of hex. Hexikins, I know you're going to get mad at it, but it's just reality. There's nothing wrong with it if you guys understand that, but that's how it rolls. Other tools that you can use. Take a look at their Twitter. Take a look at their Discord. Take a look at their Telegram. Go into them. See if they're active. Are they just shilling all kinds of garbage? Are they just shilling win moon, win 100x, win this, win that, instead of like, hey, I think we should do this. Hey, that was a really good idea on this, but I think we should have done this better. If there's no constructive criticism there, get away from it. If it's all just win moon, win 100x, win this, win that, yeah, get away from that. That's just, it's not a good community. It's something that's just there for the money. You want to look for something that's not there for the money, guys. It's not all about the money. I know you want to go into these protocols to make money, but you don't make money with other people who are trying to make money, because they'll take the money quicker than you, and that's how a Ponzi works. So now the next question that DM Smith has, he is asking, okay, so now is there a calculator to calculate the fluctuations in APY? Well, typically what happens with these protocols is they pay out into their token. Now, why is this important to understand? Well, if the token doubles in price, the APYs typically double in price. However, if it tanks, it actually tanks the APY as well because it's paid in the token itself. Now, this is important to understand. This is why these farms are reflexive and they're very hard to come back, especially when they tank. It's because when the price goes up, the APYs go up, more people pile in, which bring down the APYs. But as long as it keeps going up, it's okay. The Ponzi can still ride. Because these tokens or these pools are actually given tokens. Not like, hey, it's going to stay at 100% APY. No, it fluctuates. It has a certain amount of tokens in there. And more people get in, you get less tokens because your amount you get is diluted. Like, if you don't understand that, just think there's 100 tokens in the pool. There's 10 people in there. We each get 10 tokens. Now, 100 people are in the pool. We only each get 1 token. Now, as soon as that price goes down, that APY goes down. Now, when that APY goes down, what happens? The people in the pool are like, oh, snap, bro. I need to pull out. So they pull out. APYs, you still make a little bit. But as soon as that guy sells his tokens, now the APYs are going to go down even more because, well, the token price goes down. And then more people pull out, more people dump, down more, That's why you guys get the point where the chart goes like this. And then you're like, when you think it can't go down anymore, somehow, it just adds another zero to it and it keeps going down. And you're like, it's the bottom, bro. I know it is. I'm loading up, baby. You load up, and then it adds another zero to it. And it's like, what the snap? How many zeros can be in front of this junk? And of course, after all that, one last thing is impermanent loss. So if the APRs are like 10% and you're seeing impermanent loss of 20%, is the pool worth it? No, it's not. However, if you see APRs of like 800% and your impermanent loss is 20%, bet your buns it's worth it. Because what can happen is after, well, 1 full year, if you're in that pool, you would have 8 times your money. So I could care less what happened with that impermanent loss. I now have 8 times my money, and this is as long as everything stays equal. I have 8 times my money. I could do whatever I want. Like, I can buy back the tokens I have, hold them, and not have any impermanent loss at all. So the higher the APRs, typically what happens is it's more volatile, but the quicker you can get your money back typically is the best, but is not always the case because that's usually just for the Ponzi farms, and the legit farms usually don't pay that high of an APY or APR, but if they do, good for you. And of course, he's just given condolences. So I just want to say I appreciate that. Thank you. Hey, I'll keep cranking them out. This is my girlfriend, man. I research her every day. She's awesome. She takes all my money. It's crazy. And he is asking one last thing. What are other tools you can use? Well, yes, you have VFAT tools. VFAT will give you like the APRs, APYs. Twitter is really good for getting like different farms that are launching. What's your name, Tukes? Tukes. Good times. My name's Drake. So Twitter is really good for like finding like the next farm. Usually get shilled on them. You guys can look at them and go through this video and make sure it follows all those steps. If it's just another Ponzi farm, move on to the next, and you can look at other Twitter threads. However, once you find a good one, then you go and look into it, research it, boom, boom, done. Second is you can look at different wallets. So you can go in different wallets and see, man, this guy's got a bunch of this, and he's also got a bunch of this. What do they have to do with each other? You can go research the projects, the protocols, concepts, ideas, and then you're like, oh, wow, I see why he likes this protocol. And then you can also find other huge or just regular DeFi investors and are just like, hey, this guy talks about this a lot. Why does he talk about it? Or like on Twitter, I tweet about random stuff, or sometimes I'll be a bit cryptic about it. And I'll tweet like, hey, just something goofy. You guys can go through my tweets and see. And you'll be like, why is he tweeting about this? Because I'm just kind of tweeting about it and just giving hints. Some people do that as well on Twitter. I wouldn't be the only one who does that. But the point is, you just have to look and go through it. And then once you find one, you do your research on it. Another concept or another tool you can use is you can go to something like DeFi Llama. When you see like a protocol getting a ton of traction, find out why. What are those or who does that protocol work with? Are they working with SushiSwap? Are they working with Tokemak? Like, what are they doing? What's making them different? Find their partners. That's what I did with Olympus DAO. Like Olympus DAO, that's how I found Toke. They started talking about Tokemak, and I was like, what the snap is this Tokemak junk? What? I mean, I like mac and cheese with cheese, not Tokes. I don't even know what Tokes is. Well, a Tokemak is actually a nuclear reactor. You know, the thing like smoke, whatever. You guys get the point. But Tokemak, like, it was a complete game changer for me. It just blew my mind. And I was like, wow, this is great. I love it. Let me give you an example back in April with Thorchain. Well, what I was doing was I was researching the Cosmos ecosystem, and people were like, hey, man, I see you like Kava. You should really look into this thing called Thorchain. And I was like, nah, bro, that's trash. It was like $2 a coin. And I was like, whatever. And then it went to $4, and he was like, dude, they got something coming up. It's when they're going to open up Thorchain for trading. It's like going to be a game changer. Don't miss out. And I was like, and then I was just like, I don't see it. I mean, $4, and it's like interesting, like whatever, they're doing this launch. And then it went to $6, and then I was like, okay, what's going on? I got to look into this thing because it's literally like up only. What the snap? And I started researching it, and then I was like, native Bitcoin, no kidding. And then I started looking into like, why is native Bitcoin important? Like, what about Wrap Bitcoin? It's so cool. Well, then you realize that Wrap Bitcoin is owned by BitGo, which is centralized, and you're like, wait, that just gets rid of the decentralized Bitcoin. Like, what the snap? That's like the whole entire fundamental of Bitcoin. It's like, okay, well, now I get it. And now you're like, wait, you can trade native Bitcoin for native Litecoin? And then it's like, what the snap? This is a game changer. Then I went into the community and I was like, what is this junk? And they're like, junk? No, it's awesome. Like, here, this is what this is. The community was helpful. Check number 2. This is great. I love it. This is awesome. Then I was like, okay, now I like this. Let me go ahead and look into the tech. Let me look into the concepts, ideas. How are they doing this? Like, what is about the farm? How can you do this? Is it sustainable? What's the market cap? It was sitting at like a 2 or 3 billion, or actually it was about a $1 billion market cap actually at the time. And I was like, well, if it's looking to bring on Bitcoin, native Bitcoin, I gotta think, man, at least 5%, like 5% of people holding Bitcoin. This is just Bitcoin. Like Bitcoin was, we'll just call it $1 trillion market cap. Just 5%. That's $50 billion that comes into Thorchain. And now I already understood the technology. In order to bring in $50 billion of Bitcoin, you have to pair it with $50 billion of Rune. or AKA the other side of the Rune. You guys get the point. So if there's $50 billion of buy pressure on Rune after $50 billion of Bitcoin come into here, now I'm like, I'm all in. Let's do it. No, guys, I'm just kidding. Not all in. But that's how I came to the, well, I guess you can say conclusion, like I'm bullish on Thorchain. Now let me give you an example of Tokemak. After I found Tokemak after Olympus DAO, then I'm like, okay, what are the fundamentals of Tokemak? Well, just like I explained in several different videos, the point of Toke is, well, I understand I'm a DeFi trader, or I'm a DeFi farmer. I'm parasitic. Like, I'll go from this farm, take the yields, dump the coin, move on to the next. Now, that's parasitic for the protocol. It just dumps it. It gets rid of it and, like, flushes people out. And now with Tokemak, that's solving it, because now it's having people who are giving up their toke, which is able to, in turn, grab more liquidity for the protocol itself, and people are getting the rewards that they wanted, but they're getting less of it. Like, they're still getting the amount that they would have gotten, like it's actually more, but they're actually quote-unquote getting less, if you think about it, because now they're able to take the toke that they earn, a portion of the rewards that they paid out, because they exchange the rewards for toke, you get the point. The user, they get their tokens, they dump it, whatever. However, on the other end, the protocol is getting their toke from them, and it deposits it into the toke liquidity token reactor, stakes it, and it actually directs liquidity back to their protocol. So it's like, oh, you're going to dump my coin? That's fine. I'm going to take your toke and direct your liquidity back to my coin. Yeah, bro. Look at me now. You get the point. And now you realize that, man, how many farming protocols are out there? What's the market cap of Toke? Well, it's under $1 billion. And, well, let's see. How many Ponzi farms are there? Well, let's just take, for example, PancakeSwap. PancakeSwap, 4.5 billion. Okay? SushiSwap, 3 billion. Okay? What's next? Aave. Okay. That one's about 8 billion, something like that. 10 billion. I don't know. You guys get the point. It's like, then you start adding the numbers up, then you're like, wait. So if it's several $billion, it would be at least over 100 billion, at least over 200 billion in all of these market caps, because what's the total market cap of the crypto market? It's $2.7 trillion. So it's like, okay. And Toke, let's just say it grabs 1% of the actual crypto market cap. What's 1%? Dude, that's over $130 billion. Now Toke, market cap, less than $1 billion. Just say it grabs 1% over 130 billion. I think I'm okay with the 130x. Nah, it's got to be 150 or nothing. Anyways, guys, that's how I come to the conclusions with these different things. This is not financial advice. I'm not a financial advisor, guys. I just wanted to tell you my thinking, my thunks, my thoughts. If you guys want to see what my thunks, thoughts, thinks, whatever you want to call them, I got wrecked. There's no water in there. If you guys want to find them out, you guys can jump in the Discord. Links in the description below. I basically talk about my thinks, thunks, and thoughts in Discord, and I pop out some private videos over there that I really don't talk about on YouTube at all, and really talk about the plays I'm making before I even pop them out. But TLDR, guys, let's be non-consensus right, not consensus right. What does this mean? Well, when you're non-consensus right, you're right about something that everyone else thinks you're wrong about. Why is this important? Well, because you can make a lot of money with it. That's how. Anyways, guys, thanks for tuning in. Hope you guys enjoyed. Proverbs chapter 15 verses 18. A hot-tempered person stirs up conflict, but the one who is patient calms a quarrel. What does this mean? Guys, you need patience. Patience is where it's at. If you guys think I'm wrong for saying patience, spell out patience or patience and see what it says. Pat-E-N. Like patient? P-A-T-I-E-N-T. Anyways, guys, talking too much. See you in the next one. Y'all guys can also catch me on tweeters. It's at rent a home fast. Like literally at rent a home fast.